we've been listening to President Trump answer questions from the press following a facility tour in Austin, Texas, where the MacBook Pro is being made. Apple also announcing earlier this morning $1 billion investment in a new campus that will break ground in Austin, Texas, will house 5,000 employees, up to 15,000. President Trump answering some key questions regarding the U.S.-China trade talks. Number one, will Apple be exempted from the tariffs December 15th? The president clearly said, we are looking at that right now. It would be unfair to put tariffs on Apple when Samsung doesn't deal with such tariffs. And he was also asked whether or not there will be a phase one deal before the end of the year. We had gotten the Reuters report earlier today saying that the phase one part of the deal would be pushed off until next year. The president simply said that China would far rather make a deal than versus the U.S. For more on all that was said and what happened today at that facility, let's get to Eamon Javers. He's on the ground in Austin, Texas. Eamon.
Look, a visibly angry President Trump just there, denouncing the media, denouncing the impeachment process, the frustration visible on his face, the anger visible on his face. But in terms of Apple, the most significant thing the president did there was make that comparison to Samsung, standing inside a plant that manufactures Apple products, more or less reciting the argument that Tim Cook, Apple CEO, has made to the president in the past, which is you've got to treat us fairly vis-a-vis our foreign competitors. You can't tariff us if you're not going to tariff them. That's an argument the president has seemed receptive to over the past several months. He repeated it here. We couldn't see Tim Cook in the shot there, but you would imagine a smile on his face to hear the president say that inside a facility that's manufacturing some of his products. That may be an indication that the president is looking to do some kind of carve out for Apple from any upcoming tariffs. Remember, that deadline of December 15th is looming here. That's the whole ball game in terms of tariffs for Apple, because those iPhones manufactured in China will face significant tariffs coming back into the United States if those tariffs go into place. The president possibly hinting there that he might be thinking about a carve-out for Apple. We'll have to wait and see and get some more specifics here on what the president is planning. But he seemed to at least wink to the idea that Apple might be getting some special consideration here because of the arguments that Tim Cook has been making.
Yep. Eamon, thank you very much. Eamon Javers, live for us in Austin, Texas. It seems like most people are assuming that Apple will not be paying those tariffs, that there will, in fact, be a carve-out. That seems to be the assumption as we've seen Apple's share price go much higher.
But yeah, I mean, it's been a pretty incredible run. So I think the market's saying, Apple will sort of figure out, the president and Apple will get together, as they've alluded to here, and they figure this out, and they'll sort of be exempt from anything that goes forward on December 15th. We'll see. On the flip side of that, we can't control what the Chinese might do to Apple, right, and their borders. So, I mean, this thing has a long way to play out. Again, I've said it for a while, the market doesn't care, but I just don't see a trade deal happening in the foreseeable future. I think there's a term in cards, you're getting slow played when somebody, and I think that's exactly what's happening. I think we're getting slow played. Now, whether or not we're in better shape or they're in better shape, I don't even know if that matters at this point. I think both sides are dug in, and neither side wants to acquiesce.
It was interesting to finally see the market reaction today. We actually had a market reaction to a negative trade headline, and I think that the markets have been fairly inured to sort of the ups and downs of volatility in these talks.
Right. I mean, I think, and we've had a huge run in the market. So a tiny bit of a sell-off, not even, a full 1%, isn't really, it's not a really big move. I mean, to me, I think that we have just a hint of a taste of what that, I mean, we'll see December 15th, right? I think if tariffs go up, then I think we're going to see a fair amount of downside. So, I've always long protection, bought more today. Who knows, could go to zero. By the way, Apple's up $1.50 on that little comment.
Yeah, I mean, it would be confirmation, right, of what everybody's hoping for.
Yeah, I mean, if we don't get a phase one deal by the end of the year or by December 15th, I agree. There's probably a 10, maybe 15% pullback in the S&P 500. But with regards to Apple, I mean, this stock is up 65% this year. Melissa, as you mentioned, the multiple has expanded significantly, and it's really all off the back of, better than expected iPhone sales, right? Whereas I believe the focus should be more on wearables and services. They're high margin businesses. Everybody wants AirPods right now. That's at top of the list when it comes to holiday shopping right now. In services, that's the recurring revenue, high margin stuff. So that's where the focus should be with regards to Apple.
You don't think it's there? I'm sorry to interrupt. You don't think the focus is on services?
Well, I think it is. I think the multiples have expanded recently because of better than expected numbers off the iPhone. I mean, the stock has just roared.
I probably have to disagree with in terms of the iPhone, because I think people have absolutely finally come to grips with the idea that the iPhone is now less than 50% of the revenue, right? So because of that, I think now that does bring in, because the iPhone, the new phone's great. Everybody thinks this thing is great. But I think the reality is the focus has moved over to what you said, which is services, wearables. That's where they're actually getting the margins. So I think we're going to continue to see the phone sales start to be less and less of the percentage of the revenue. And I think we're going to see the other side start to grow. And then it's AI, and then it's AR, and it's everything else that they are working towards. And we're talking about the credit card, all these different areas that Apple, the different tentacles, the verticals that we talk about all the time. Those are the areas of growth. And I think that's what people have finally started to focus on.
Isn't, though, I mean, there had always been an argument that it's a flywheel effect, that you need the installed base in order to have all of these other services and the ecosystem working. So isn't there a fine line? I mean, you can have revenues from the phone be less and less as a percentage of total revenues. You can have the install base stall. But at some point, you still need that install base to at least stay steady.
No question about it.
In order for this
and I think you keep that steady by coming up with newer, better, everything we always see, the 3-camera phone and all this stuff. That is what builds into that, Mel, in my opinion. But the reality is we've got to focus on where are they growing. And that's where they're growing. They're growing in services. They're growing in wearables. And that's where the margins are for Apple.
Yeah, and you see the lift in after-hour session in shares of Apple up now by 0.6%. Let's get more reaction to the president's comments on Apple. Bring in Dan Niles, founding partner at AlphaOne Capital Partners. Dan, great to have you with us.
Good to be on, Melissa.
Let's say the president decided, you know what, we are going to go ahead with the tariffs on December 15th, and Apple won't have a carve-out. I'm wondering, how much is at risk for the shares?
Well, I mean, I think you got a taste of that last year, right? I mean, the stock went to all-time record highs in early October, and for some reason, investors seemed to convince themselves that Apple was immune to issues that everybody else they were discounting to China. And then Apple came out, pre-announced negatively the December quarter because Apple has a high teens percentage of revenues from China, and the stock got absolutely killed. And as you talked about earlier, the stock is up, I think, 67% year to date, but revenues are up 1% for this year, and earnings are up 1%. So that's all multiple expansion. And so if you end up back in the same situation as last year, I mean, right now the market is in this mode of fear of missing out. Apple's a big portion of people's indexes. Nobody wants to get left behind, and I think you've got a lot of people buying Apple because it's going up, much like last year. But that doesn't have a lot to do necessarily with fundamentals. And so, to your point, I think you'd have a massive correction in this name if you didn't end up with the tariff rollback on December 15th. And quite honestly, even if you do, with the stock up as much as it is, the valuation, as you pointed out earlier in the segment, it's at a 9-year high. So it's not like people aren't already playing this. And the risk-reward, to me at least, up here is not that great. I mean, we used to have a massive position in Apple earlier in the year. It's down to a very small position right now because as the stock's gone up, we've moved it into other positions that we think are much more interesting than Apple at these levels.
What valuation should Apple have?
Well, I mean, valuation's always tricky, right? Because you look at this and you say, EPS is up 1% for the year, stock's up 67. And you and I both lived through the late 90s, right? Valuations can go from insane to outright stupid. So, my feeling with Apple, when you've got their main market, which is iPhones, which are shrinking, or smartphones in general. Why? Because every one of you sitting on that set has a smartphone. There's 5 billion people out of the 7 billion people in this world that have a smartphone. And it's a lot like PCs, right? PCs went through 7 years of no growth. So with Apple, my view is that the multiple should be more in the mid-teens or a market multiple, not at a premium, because their major end market, there's no growth in it anymore because it's just saturated.
You had mentioned that you've moved Apple money into other places in the market. What is your highest conviction position at this point?
Well, it's sort of related to Apple, and I think people, get it confused. But I think when you look at next year, the biggest trend and why I think a lot of people will be buying new phones next year is 5G. So what 5G does is it increases your data speed by about 10x. And I think one of the things that's going to come out of that is augmented reality features that are going to be very interesting. And so, we own a company called Lumentum that provides lasers that make that possible. When Xilinx blew up and cut their forecasts just recently. We went in and bought that. They provide a lot of the FPGAs, semiconductor chips that make 5G base stations possible. And so that's another name that we got involved with. And then, you're going to have that that 10x increase in data speeds is really going to continue to help drive cloud growth. So, Amazon's a name we still like. They have $35 billion in revenues related to the cloud. It's still growing over 30% year over year. And the nice thing is those forecasts came down. We were short the stock into their quarter. When they said, profitability is going to be way less, we bought it after that. The one-day shipping stuff is going to be very good for them. And, there's other chip names like Intel and NVIDIA also, which we're involved in. So I think there's a lot of really interesting ideas for next year that you can buy at much cheaper valuations. Intel at 13 times, Lumentum at 13 times. Apple's trading at 20 times. I'd rather buy those other names where there's a lot less hype.
Dan, great to speak with you. Thanks for calling in.
My pleasure, Melissa.
Dan Niles of AlphaOne Capital Partners. Xilinx, that's a Guy Adami name.
Yeah, we talked about Xilinx. I mean, that's a pretty straight 5G play, and it's actually sold off a lot as we've seen. I don't know exactly why. Some of their guidance has been sketched, obviously the China situation, but I think Xilinx makes sense. Going back to Apple real quick, I mean, okay, you want to play the mid-teen multiple game. It's traded there before, but it's an entirely different company than it was 5 years ago. Pete talks about this all the time, and you give them a market multiple off basically $15 that they're making next year, and you get to the $280 stock that we've talked about, and I think people on the street have given that the price target. I think that's what makes sense. So, say what you want about multiples and where it should be trading. I think given their market mix, a 19 multiple in this environment. There should be a re-rating
of the stock.
I think that's what you've been saying.
And you agree?
I agree. Also, I think to look what it's done year to date is really a red herring. Remember where we were at the beginning of the year, right? Okay, so the multiple in Apple was about 12 at the beginning of the year. So it's not just because it's up a lot from that, to me, isn't enough to say you shouldn't own Apple because it's up so much. I agree with Guy. The mixed multiple is happening.